Hi, I'm Tom Lydon, editor of ETF Trends here in Chicago at the Morningstar Invest Conference. And with me now is Jeremy Schwartz, Director of Research for WisdomTree. Jeremy, thanks for spending a couple minutes with me.
Thanks for having me.
Listen, a lot of advisors have kind of moved from that cap-weighted traditional indexing, and they're morphing out into areas like low volatility, dividends, and I know the dividend area is something that's near and dear to your heart. Tell us a little bit about the tools that WisdomTree is offering advisors that are looking to kind of make that difference and change.
When you look at the ETF industry, what's amazing in terms of all the strategies out there today, I'd say about 95% of all the assets are tied to one strategy, whether it's U.S. large cap, U.S. mid cap, small cap, foreign stocks, EFA, the emerging markets, even bonds. All the bonds are all following one market cap weighted strategy historically, and people are starting to say, is that a sensible thing? You know, we're here at the Morningstar ETF conference. If we were here at the Morningstar Active Manager conference, how many people would use one active manager for their entire portfolio, right? You'd say Bill Gross is great at bonds, but maybe not small cap emerging market equities. But here with ETFs, it's routine. They all follow one cap weighted strategy, and we don't think that's common sense. We think people should start diversifying. Dividend weighting is one great way to provide an alternative to the traditional cap weighting as a valuation-based mechanism to rebalance based on a concept of value, focus on higher dividend stocks, raise the dividend yield on the market. We just think it's a part of a natural evolution from shifting away from just being concentrated in this one cap weighted strategy.
Give me an idea in one of your products, for example, how is that structured for dividend weighting? How, give me an idea of your favorite, maybe its components, and what went into the structure of that index.
Well, if you look at just say like the U.S. markets to start, the large cap dividend index represents 300 largest dividend-paying stocks in the U.S. It's like the S&P 500 of dividends. You weight by the contribution to the total dollar value of dividends. So, this year Apple just announced its very first dividend. $10 billion of dividends it's going to pay. There's about $300 billion of total dividends in the U.S. So when you rebalance, and Apple is now looking like it's eligible for inclusion, meeting the current listing requirements, it would represent $10 billion of the $300 billion total dollar value of dividends, or a 3% weight at the rebalance, and that's what we mean by dividend.
So what would the yield be on that ETF?
The index looks like about a 3% yield, a little bit over 3%, so about 100 basis points higher than the S&P 500, which is about 2% yield.
And corporations here in the U.S. are sitting on a lot of cash, right?
Payout ratios are at an all-time low.
Yeah.
They're only paying out 30% of their earnings as dividends, so there's definitely a lot, people say, room to increase their dividends given that low payout and high cash balance.
Let's switch overseas emerging markets right now.
Yeah.
When I first got in the business and they were talking emerging markets, that was risk, 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 big warning signs, stay away. Is that the same today? It's
an amazing reversal how far they've come in the last decade and a half since the Asian crisis in '98 when emerging markets were really driving the global crisis. Today you see Europe, you see Japan, you even see the U.S. having overextended debt to GDP ratios.
Right.
And they're the ones with more of the fiscal problems. And the emerging markets are in better shape. They're in better shape balance sheets. They're getting better growth. They have younger populations, so they don't have the same entitlement problems we do here in the U.S. So we like the emerging markets for their growth prospects, but also they have very high dividends. We're talking about dividend stocks. Our emerging markets equity income index has one of the highest dividend yields of all the different indexes we have. And given that underlying growth trends we see there, we think that's a very attractive combination.
And with accounting overseas, no worry with the way they look at their balance sheets. Any concern there?
I mean, that's even more reason to focus on the dividends, is that you don't have to worry about them restating the earnings number. The cash in your hand is just an extra corporate governor's check that the firms have the ability to pay out that cash dividend.
You see that continuing going into 2013?
Yeah, we see emerging markets have got some of the longest term growth. If you looked 5 years ago, they represented about 13% of all the dividends paid in the globe. Today, they're about 17% of all the dividends paid. So their growth rate in dividends is occurring faster than the rest of the world, and we see them being, a driver of overall growth going forward.
So an advisor is interested, they can go to WisdomTree.com and you break down the underlying constituents.
Our website has, that's the great thing about ETFs. You can see every holding we have every day. And so like you said, WisdomTree.com, you pull up any one of our different equity ETFs and look at the underlying holdings.
Great. Jeremy, thanks for your time today. Again, it's Tom Lydon at the Morningstar Invest Conference in Chicago. Thank you.